In this video, we're going to have a look at AGNC Investment Corp, ticker symbol AGNC. This is a requested video. If you would like to request a video, please let me know in the comments below. AGNC Investment Corp is a real estate investment trust, also known as the abbreviated REIT, that focuses on investing in residential mortgage-backed securities that are guaranteed by US government agencies such as Fannie Mae and Freddie Mac. The stock has a market cap of $5.13 billion and a PE ratio of 22.86. The stock has had a 52-week range of $6.81 to $12.25 and an average volume of 15.04 million shares. If we zoom out to 5 years, the stock price value has continued to drop, so no growth in this at all. It's all about the dividend really, and if it's sustainable. If we zoom out even further, it does not look good. If you'd purchased one share in May 2008 at $19.05, you would have lost 55.59% in value as of the 8th of November, which is a stock price of $8.46. But you would have collected dividends in that time period, and that is something that we will look at. If we look at the dividend metrics, the dividend yield is currently 17.02%. Compound annual growth rate over the trailing 12 months has been 0%, minus 4.24% over 3 years, and minus 7.78% over 5 years. For REITs, it's better to use the adjusted funds from operations, abbreviated as AFFO, as this provides a true reflection to see if the dividends can be covered. Looking at tip ranks, it is currently 51.74%. If we go to the AGNC investor website, they have an investor section. Looking at their historical data, they had the first dividend payment of 31 cents, which is paid in July 2008, then $1 in October, $1.20 January 2009, drops to 85 cents in April, then up to $1.50 in July, then stays at $1.40 for a few years before cutting to $1.25 in April 2012, then cutting twice in 2013, then again another 2 cuts to 65 cents, then 22 cents again, another cut in 2015 to 20 cents, another cut in 2016 to 18 cents, another cut in 2019 to 16 cents, then again in 2020 to 12 cents, which it has stayed at until today. They do like to cut the dividend. This is something to take into account. Where did the cuts end? They had the stockholder presentation on the 31st of October, so we have some up-to-date data. Their initial public offering was $20 a share, so although that one share is worth $8.46 as of the 8th of November, they have paid $46.84 in dividends per share. So in terms of value, if we add the current price share to the amount of dividends, that would give you a 176.5% return. Although the stock price has performed terribly and the dividends keep getting cut, you would still have been okay. Let's have a quick look at how it's performed against the S&P. If you'd invested $10,000 10 years ago and reinvested the dividends, you would have a total return of 43.83%, ending with a value investment of $14,379.26. The S&P gave a 189.23% return, with $28,915.46. If we start from their IPO in 2008, the return would have been much higher, almost matching the S&P. The continued dividend cuts have really diminished returns. Let's see what analysts are forecasting. Market beat of an average price target of $10.50, 24.11% upside from where we are today based on 6 analysts. Tip ranks have an average price target of $8.94, 5.67% upside from where we are today based on 10. And Zacks have an average buy price of $97.72, 16.55% upside from where we are today based on 9. From the targets of Market Beat, Tip Ranks and Zacks, an average price between the three is $9.72. If we head over to Value Investing, I've had a look at what the intrinsic value calculations are based on the dividend discounted model. It has a fair price of $5.24, which is 38% downside. If we have a look at the Peter Lynch formula, which is earnings growth times trailing 12 months earnings per share, sees it as a fair price of $12.54 with 48.2% upside. If we take an average of the analyst's expectations and the investing models, that would give us a fair value buy price of $9.16. With a 10% margin of safety, that would give us a buy price of $8.24, which is slightly lower than it is today. I don't have any shares in AGNC. If I did, I would hold and collect the dividends. I would not start a position now, even though the yield is very high. They have a history of cutting the dividend and I would like to see growth. I think there are better opportunities out there and other REITs I prefer. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.